We are officially in January 26th, and I see a lot of sellers making the same mistake they make every single year. They are waiting for spring because they think that the real estate market is still asleep for the winter. But if you look at the historic data, that strategy is actually backwards. We're entering what I call the winter wake up, a period where demand typically explodes while inventory stays relatively low. Hi, I'm Jack Ma with Century 21 Masters. Today, I want to show you the number from 2024 and 2025 to prove why the market is about to accelerate right now and why interest rates are creating a unique window of opportunity this year. Now, we don't have to guess what happens in mid January. History tells us exactly what to expect. Let's look at last year, 2025. From the start of winter to mid March, buyer demand, measured by pending sales, rocketed from roughly 2,300 to 3,800 units. That was a massive 65% surge in activity. And it wasn't just a one time fluke. In 2024, during the same period of time, demand also grew by 49%. The 3 year average before COVID, also 49%. That pattern is undeniable. Buyers wake up in January. But here's the catch: supply does not. While demand historically jumped from 50 to 65% this time of the year, the number of homes for sale usually grows by about 20%. That huge gap between high demand and low supply is what drives the market. And we are poised to see it happening again right now in 2026. So that is what happened in the past. What is different about this year? The biggest factor is the cost of borrowing. We are currently sitting at 3 year low for interest rate. We saw rates tick down recently because the government, specifically President Trump, via Freddie Mac and Fannie Mac, has been actively buying mortgage-backed securities. Now, without getting too technical, this program will help narrow the spread between Treasury bond and the mortgage rate. It is an intentional move to keep housing affordable and stable. Because of this, we expect rates to remain stable in the 6 to 6.5% range through March and April. Occasionally, we may see it dip down to below 6%. We aren't expecting any dramatic spikes unless economic overheat, which currently looks unlikely. Speaking of economy, the data right now is surprisingly calm. Inflation is sitting around 3%, which is near the historic average. Unemployment claim have dropped mostly because people stopped looking for work during holiday. But overall, the job data is holding steady as well. This stability gives buyers the confidence to jump back into the market, which is why we expect that surge in demand to repeat itself this winter. So, knowing all this, what is the right move for 2026? For buyers, the wait and see strategy is officially outdated. We're currently sitting at 3 year lows for the interest rate. And remember, the economic data I just showed you. Inflation is stable. The job market is also stable. When the economy is this steady, it signals the rates aren't going to crash. They're going to stay right where they are. So waiting doesn't save you money. It just costs you time while you miss out the current interest rate. For sellers, you need to understand that right now you have a massive advantage: low competition. By April, everyone else's will list their homes, and you will be fighting for attention in a crowded market. The smart move is to list it right now while demand is up and you are virtually the only game in town. If you want to run the number for your specific situation, give me a call. 909-610-5188. This is Jack Ma with Jack Ma Real Estate Group. Thank you for watching, and I'll talk to you soon.